it could be debated, and I'm always up for a debate on an analysis, but this is the analysis that Sentient Trader is using at the moment for the live analysis system. As you can see, this big pile of diamonds over here, and these semicircles make it more visually apparent. Sentient Trader is saying that there was a trough of the 18-month cycle on the 4th of October 2011. Okay, so not very long ago, about 2 months ago, there was a trough of the 18-month cycle. Since then, I need to quickly clear my whiteboard. Since then, scroll down again. Okay, that didn't work. I need to turn off the whiteboard, then scroll down, and then turn it on again. This is all getting a bit complicated. Sorry about that. Right. So since then, Sentient Trader has found a 40-day trough over here. I don't know if you can see that in early November. But I'd like to point out that that positioning of that 40-day trough is, where is it? It's over here actually. Analysis has been quite difficult recently in the euro to US dollar because of the identification of that 40-day trough. As you can see, there are several candidates. I'm making a real hash of this chart with drawing all over it, but there are several candidates for the 40-day trough. If I use a finer pen, as you can see, it could be there, or even there. Sentient Trader has, of course, chosen the one that it thinks is most likely. It's a point that could be debated. But now, of course, what Sentient Trader is expecting to see is that the market is falling into an 80-day trough. Now, it is possible that that fairly prominent trough right at the beginning of December, or was at the end of November, I think right at the beginning of December, that could, of course, been a trough of the 80-day cycle. So what we the next shorter time frame, which is the 4-hour bar time frame, and we have a look at how the analysis has been refined. And this chart is much more zoomed in so that we can get a better feeling for the details of the analysis. And as you can see, that trough, which was the 25th of November, has been phased as a trough of the 20-day cycle, as is shown by that pile of diamonds over there. Now, that's something that we could debate. We could discuss whether that was really the 20-day cycle, or whether, in fact, this expected 80-day cycle, which you can see is represented by this blue line, stretching from here. We call them circles and whiskers. The circle represents the exact day or hour or bar on which the 80-day cycle is expected to form a trough, and the line represents the range of time during which that trough could occur. And so, as you can see on the 4-hour chart, this trough on the 25th of November did in fact fall within the range of time during which a 60-day trough could have occurred. I say 60-day trough, I mean 80-day nominal. The actual average length is 67 days. I mean the 80-day trough. So this could in fact be the 80-day trough. Now, why hasn't Sentient Trader said, oh, well, because it could be the 80-day trough and it looks quite big and impressive, it is the 80-day trough? The reason it hasn't is because of the way that the analysis has broken down in the shorter and shorter cycles, going all the way down to the 2-day cycle. Believe me, it considered the option, and it tried to break down the shorter and shorter cycles, but it didn't find a very satisfactory solution. It doesn't mean that this is definitely not the trough of the 80-day cycle, but the resolution of the shorter cycles isn't as satisfactory if you consider this to be the 80-day cycle trough. So Sentient Trader is currently considering this to be a trough of the 20-day cycle on the 25th of November. So then what we do is we go and we have a look at the next shorter chart, and we see how the analysis has been further refined. And as you can see, here is the 20-day cycle trough, of course, on the 25th of November. This is a 1 hour chart. So each one of these bars represents 1 hour's worth of trading, and you can see that a trough of the 10-day cycle has been found over here on the 6th of December. So that's a trough of the 10-day cycle, and so we step down to the next shorter chart, which is a 15-minute chart, and you can see the analysis has been even further refined, and there is the 10-day cycle trough on the 6th of December. You can see exactly which bar it occurred, which hour it occurred in, or which 15-minute bar it occurred in, and so what's happened to the market since then? Well, of course, the market has bounced up and is now coming down into this circle and whisker formation over here, what we call a nest of lows, which you can see here is marked as the 36.2 hour cycle. The 36.2 hour cycle is actually simply a fairly long 1 day cycle. We call it a 1 day cycle. In fact, the usual nominal length of the 1 day cycle is about 26 hours. So it's currently running at 36 hours, so it's a slightly long cycle, so that cycle is being stretched at the moment. Cycles which get stretched usually occur when you have an underlying trend. In other words, longer cycles pushing downwards. You get cycles stretching out longer. So that might be an indication that, in fact, the 80-day cycle trough has not yet occurred, and that the longer cycles are still pushing down, and we're coming down towards this 1 day cycle trough. So then we move to an even shorter chart, and we take a look at the 5-minute chart. Let's see what information we can get from this chart. Here is, of course, the 10-day cycle trough at 8 a.m., 9 a.m. on the 6th of December, and here you can see the shorter and shorter cycles. Now here again is the circle and whisker pattern, but in greater detail for the expected 1 day cycle trough, which according to this analysis we are expecting to occur at, what is that, about 9 p.m. this evening, Central European time. And the range of time that it could occur is any time from this point here, which is about 10 a.m. this morning, and it could occur as late as 5 a.m. tomorrow morning. Okay, so sometime within that time period, we are expecting a trough of the 1 day cycle to occur. You can see the 5-hour cycles, which is the next shorter cycle from the 1 day cycle. There's an interesting and unusual harmonic ratio that occurs between the 1 day cycle and the 5-hour cycle. So here you can see the 5-hour cycles that have been identified in the market: 1, 2, 3, a really long one, and then we are now expecting another 5-hour cycle to occur round about now, actually. And so there you can see possibly a 5-hour cycle has just occurred. And that would be the 4th 5-hour cycle, and then there would be another 5-hour cycle expected before the 1 day trough, which, as I mentioned, we're expecting to occur round about 9 o'clock this evening. I'm going to be at home and in bed by 9 o'clock this evening, so don't phone me when you see that trough coming in, but we're certainly expecting it round about that time this evening. Of course, it's possible, you can see here, this is a very long 5-hour cycle, and it's possible that actually there is an alternate analysis, and that in fact the 1 day cycle has already occurred, and that this trough that I've highlighted here is in fact the trough of the 1 day cycle. That's possible. But certainly this is the preferred analysis that Sentient Trader is presenting over here. Now, what is this interesting box with the dashed lines over here? That is in fact an FLD projection And you can see, I don't know how good your eyes are, but you might be able to see that written in the corner of that box it says N, capital N, which stands for normal FLD projection, and then 36.2H, which stands for a normal FLD projection for the 36.2 hour cycle, that 1 day cycle. So what happened is the price crossed the FLD for the 36.2 day cycle, and it has generated a projection, and the projection is, in fact, that's what these dotted lines are. The projection is to exactly over here. And so you can see this is all beginning to make sense. This projection is saying that it's expecting the market to come down to about 1.3355, perhaps, at around about 9 o'clock this evening. That box also represents a range of time and price. So you can see that. Looks as though that projection is all coming together. Right, so that's the background to our trading chart. Here we are again on our trading chart, and let's see how the trading chart has first of all refined that analysis and how it is trading on the basis of it. First of all, how has it refined the analysis? Well, if we have a look at the analysis here, you will see that the 5 hour cycle that I was speaking about a moment ago has now been phased on the 1 minute chart. There it is. So Sentient Trader is saying that this trough here, which occurred 5 minutes after we started today's trader chat, it's saying that is in fact the expected 5 hour cycle. Okay, trough, cycle trough. And there it is, the pile of diamonds going all the way up to 5 hours. They are hollow diamonds, they're not diamonds. That means that phasing is still not confirmed. There's not enough evidence to absolutely confirm it. But certainly it seems likely that trough there, which occurred at about 6 minutes past 2, I think, was a trough of the 5 hour cycle. So what has Sentient Trader done because of that? Well, as you can see, Sentient Trader enters a long trade on the basis of that, a long trade which it has in fact just exited at a loss. And in fact the analysis has changed as I've been speaking. As the price has dropped down below that point, you can see Sentient Trader has reshuffled things a bit, and it is saying actually it thinks that 5 hour trough has not come in yet, and that 5 hour trough might be expected to come in any moment now. If, of course, you were trading this market yourself on this long trade, and I must remind you, the live analysis system is a completely automated system. It performs these trades automatically. So if you've been trading this yourself and you'd entered long over here on the basis of this trough being a 5 hour trough, then you might well have set yourself a few tighter profit protection stops and got out before the trade turned into a losing trade. But on a completely automatic basis, what will happen is as you're coming into